Welcome and thank you for standing by for today's conference. All participants will be in listen-only mode until the question-and-answer session of today's call. At that time, to ask a question, please press star 1. Today's conference is being recorded. If you have any objections, you may disconnect at this time. I would now like to turn the conference over to Brian Beams. Sir, you may begin.
Thank you, Melinda. I appreciate it. On behalf of the U.S. Commercial Service, the Connecticut, New Jersey, North Texas District Export Councils, and SBA, EXIM, TD Bank, and Risk Protection International, we welcome all of you to today's webinar titled An Overview on Trade Finance. My name is indeed Brian Beams. I am a Senior International Trade Specialist with the U.S. Commercial Service. I am your host for today's webinar. Joining us are my colleagues Anthony Sargis, who resides in our Connecticut office, and Mr. John Kim, who is in our North Texas office. A couple of items to note. Be sure you are connected to using both your telephone and the online WebEx platform. All telephone lines are currently muted. We will open the lines up for questions at the end of the presentations. We will also take questions submitted through the Q&A feature on the WebEx platform. All attendees will receive a survey by the USCS later today or tomorrow. Please complete the short requests. They help us develop future programming for you, the business owner. Anthony will send a summary of email out tomorrow that will have the webinar recording and the slide deck. And lastly, our web address has changed. Please note that all U.S. commercial service information can now be found on www.trade.gov. Again, that's www.trade.gov. I'd like to take a minute to inform our audience about the U.S. Commercial Service. We are the trade and investment arm of your federal government, a division of the International Trade Administration. Our mission is to promote U.S. exports, protect U.S. commercial interests abroad, and facilitate foreign direct investment into the United States. We have a global reach. Our domestic fields total in over 100 offices. Internationally, our offices are located within the U.S. embassies and consulates in over 70 countries. Next slide, please. Here is the list of our upcoming webinars for this series. Please note the date and the title if you have not already registered for all of those. Thank you, Tony. Now I'd like to introduce today's first speaker, Mr. Ed Urkel, with the Office of International Trade for the U.S. Small Business Administration, also known to many as SBA. Ed has significant export financing experience both on the commercial banking side as well as on the exporter side. Among others, Ed headed up the export finance activities in North America for Siemens, Europe's largest engineering firm. He was a regional director at the Small Business Division of the Export-Import Bank of the United States before joining the U.S. Small Business Administration's Office of International Trade in January of 2018. He is located at the U.S. Export Assistance Center in New York City, together with representatives of the U.S. Commercial Service and the Export-Import Bank of the United States. Ed assists small businesses headquartered in New Jersey, as well as their leaders, in the use of small business SBA's Guaranteed Export Loan Program. Without further ado, I welcome Ed. Ed, you're on mute, Ed.
Good afternoon or good morning. Thank you, Brian. So I am part of the Office of International Trade of the SBA. It's a small group. We have about 30 people, some of them in headquarters in Washington, but 21 of us are spread out over the country. And like Brian mentioned, I'm in the New York office, but we have offices all over the country, co-located with the U.S. Commercial Service and the EXIM Bank usually. We work closely with other federal agencies. We also work with state and local resources, and of course, very importantly, the private sector. Our programs are lender-driven, and we will also talk about export credit insurance, and that is also very important to our business. So we work with private insurance brokers or the EXIM bank as well. Most of us know each other well, at least in the region. So I know the people around New York well, and all around the country that's the case. So we like to offer ourselves as a resource to small businesses. Now, when I was in the private sector, and I mentioned export finance, I really thought about three aspects of that. One was dealing with financial risks, primarily the risk of non-payment by the foreign buyer, but it could also be the risk of bonds being drawn, and I'll come back to that later, or foreign exchange risk and things like that. The second thing that was very important in my job was working with sales. Okay, if I had the chance, I would ask you all, how many of you are in finance, how many of you are in sales, okay? Because that's a very important part, in my mind, working for an exporter, doing export finance. And the third and last part is really what might come most natural to one when you say export finance, the need for working capital to, build the goods that you're going to sell or acquire the goods that you're going to sell them perhaps on terms, and then you have to finance foreign accounts receivable, etc. So the way I look at it is that the presenters today, are specialists in certain of these areas, and I'm the specialist then in the SBA export loan programs, but I need to know a little bit about what the other people are doing as well. Just very briefly, the reason the federal government supports small businesses exporting is that it is good for the country, for the economy, balance of payments and things like that, but it is also good for the businesses. Most small businesses that export grow faster, are more profitable than companies that don't. And of course, it is a huge market out there. 95% or so of the world population is outside the United States. About 3/4 of the world economy measured by gross domestic product is outside of the United States. So if you focus on only the United States, you really limit yourself tremendously. So the key role that the SBA sees itself playing in the financing of small business exports is that we help provide access to capital. Now, I noticed that some of the people registering for that some of the people registered work for gigantic companies. So perhaps that's obvious, but to work with the SBA, you have to be a small business. I'll talk a little bit more about that later, what the eligibility requirements are. But generally, the company has to be fewer than 500 people in manufacturing, fewer than 100 people if you are in wholesale. Oops, I'm sorry. Let me just catch up with my slides here. I apologize. There we go. So if you're a huge company, you don't qualify to work for us. Generally 500 people in the industry, 100 people in, if you're a wholesaler, then there are some other requirements. Now, small businesses have generally, not such an easy time borrowing. The current situation with COVID only makes that harder. And in exporting, it can be particularly difficult. And that's because lenders usually like to make secured loans, secured by the assets they finance. But in the case of, for example, foreign accounts receivable, lenders cannot lend against that. That is not considered eligible collateral. And we will come back to that. But the SBA helps overcome some of these issues and help provide more access to capital. Let me move the slide a little bit, but I might not go through all of them. This one, for example, just very briefly talks about the various stages of the sales cycle. But it is, you know, if you're starting an exporter, you start thinking about, do I want to export? You look into it. You might talk with the Department of Commerce, get intelligence and things like that. If you decide to go ahead, you need to prepare production for it, especially, of course, if the goods that you want to sell are tailor-made for the foreign markets. And then ultimately, when you're ready to sell, you need to purchase the raw materials, or you need to acquire the goods that you're selling. You ship them. Depending on the payment terms, you might have to wait till you get your payment, and you need the export working capital. That generates export working capital needs. Now, before going into some more detail on the programs, again, it is a lender-driven program. So borrowers, the small business exporters, have to apply to the lender. The lender benefits from the SBA guarantee, and that's a very high guarantee. It's 90%, and that facilitates the lender entering into transactions that they could not enter into without the SBA guarantee. As a matter of fact, the lender has to certify that it could not do the transaction without the SBA guarantee. Also, what I would like to mention before going into detail, there is something we call indirect exports. Okay, that is in essence when a U.S. seller sells to another U.S. buyer, and that U.S. buyer exports. So, often used example, of course, is Boeing. Boeing has hundreds, if not thousands, of small subcontractors, suppliers. They sell to Boeing. Boeing assembles the jet, sells it overseas to foreign airline, and exports. That small U.S. supplier selling to Boeing qualifies for our programs as an exporter. I want to mention that up front, just to make some people in the audience realize that perhaps they, qualify more easily for some of these programs. For some of these programs than you have thought. Okay, so we have 4 programs. 3 of them are different types of loan programs. One of them is a grant program. I like to go into the loan programs first, but the overview is the Export Express. That is a smaller amount that can be borrowed under that facility. It goes only up to $500,000. It could be a revolving line of credit or a term loan. And it is a flexible product from a lender's point of view. Lenders can use their own procedures to book a loan like this, use their own collateral requirement, their own underwriting requirements, their own documentation. They don't even need the approval of the SBA to do the loan. The SBA has delegated that to the lender. So it is a fast, relatively fast type of facility to put into place. The next one is the export working capital facility, and that is what I mentioned earlier in connection with the sales cycle. Once you start producing for exports, you need to buy raw material, you need to pay your labor, you have overhead. Then you ship, you might have to carry the foreign accounts receivable. This products help with that. This goes up to $5 million. And this also has a 90% guarantee to the lender. The last product is a term loan. We call it the international trade loan, and that can be used for things like purchasing equipment that you need to manufacture the goods you're selling, or real estate, or permanent working capital and things like that. I will go into a little bit more detail one by one, but I want to go through it pretty quickly since I kind of already gave an overview of what this does. So flexible product, you can do it for small expenses like participating at a trade show and things like that. Also can work like the export working capital facility, but on a smaller scale, or can work like the international trade loan as a term loan, but on a smaller scale. Can be used for standby letters of credit. And I won't go into that in detail here, but I will in a moment. The export working capital program, again, $5 million. There are different structures possible. You can have a small business with a big $3 million order. Might take them a year to build. This is not made up. I have customers like this. And it is the transaction or the loan is structured around a single transaction. It can involve buying the inventory, paying the labor, again, close to a year is the cycle really to produce the equipment before it gets sold. And then if it is sold on terms, you don't get paid immediately upon shipment in full, then it can also work to finance the receivables. Once the receivables get paid by the buyer, it will pay down the loan, okay? It can also be a revolving structure. Not a specific big order, but you take a snapshot of your company's balance sheet. You see inventory and receivables with certain values. The lender would use certain advance rates against that inventory. Say, for example, you have, $1 million in inventory. The advance rate is 40%. The lender would make up to $400,000 available against the amount of inventory on your balance sheet. And similarly with the receivables, maybe a 60% advance rate. If you have $1 million in receivables, the bank could lend up to $600,000 against the receivable. Now, this is basically an asset-based lending type of situation. And you, as a borrower, have to prepare monthly borrowing-based certificates to facilitate the bank being able to establish that there's enough collateral to make these loans. On the trade loan program, the term loan program, I basically mentioned this. I think I won't spend time on it at this point. Just to very briefly come back to the step grant program that I skipped. So this is not a loan program. This is a this is a grant program, and I can talk more about it. This is free money from the federal government, in essence. I don't want to go over time too much. I won't go into detail, but it is worth looking into. They are not huge amounts, maybe $10,000 or so, but, you know, pays for lunch and a good one for that. That is basically it for my presentation. I'm sorry, for the step plan program, I will make a link available so that you can easily go into more detail. I can make other links available where you can go and look into more details about these loan programs, or please just contact me and I can provide a lot more detail. This is really meant to be just a brief introduction, let you know that I'm there. We are all here to help you. I haven't been with the federal government too long, but it's a pleasure to say I'm with the federal government and I'm here to help you. That is really my job. So please shoot me an email or just give me a call. And all the stuff that I talked about, we can go into a lot more detail. And that is it for me. Thank you very much.
Thank you, Ed. We appreciate it. Our next speaker is Richard Foy with the Export-Import Bank of the United States, or also known to many as EXIM. Richard is EXIM's regional director for the Northeast. Prior to joining the bank, Richard was with the International Finance Group, or as Vice President of Commercial Lending. He provided access to loans by working with various funding sources to meet the needs of his clients. Prior to IFG, Richard was marketing and underwriting ocean marine cargo insurance and has an extensive logistics background with over 20 years in the field, holding positions in operations, risk management, quality assurance, and environmental affairs. Richard attended St. John's University in New York, where he earned a degree in business administration. Richard, the floor is yours, sir.
Thanks a lot, Brian. Good afternoon, everyone. I appreciate your time. This is going to be kind of a quick presentation about EXIM, what we are, and a couple of programs that you might benefit from. So first, EXIM Bank, we're an independent agency of the U.S. government established in 1934 as part of the New Deal. We're headquartered in D.C., and we have satellite offices around the states. Our main mission is to support American jobs through export of U.S. goods and services. These are some highlights from FY18. I didn't have the 19 ones, which have actually increased from this, but this is to highlight our emphasis on small business. I think everybody knows what we do for large business, Boeing and GE, and projects abroad and so on. But this here is to show that, of the $3.3 billion that we supported in exports in 18, $2.2 billion were for small business. Over 66% of the bank's total authorizations, 85% of the export value were for small business. And over 90% of our transactions directly support U.S. small business. So no company or deal is too small for us. We'll get into the lender's preference and what they use us for and what they choose not to. There are four main ways that or products that support you as an exporter. One, offering competitive terms to your foreign buyers, reducing your risk in case of foreign buyer non-payment, and I'll touch on that probably most in this presentation. Obtaining pre-export working capital loans, very similar to what Ed just reviewed, and arranging for term financing for the foreign buyer at U.S. interest rates for capital goods. So export credit insurance is the first solution that I'm going to present. Mainly, we protect against non-payment by foreign buyers. This is for commercial and political risks. It can be used as a sales tool, so you can offer competitive terms to foreign buyers, typically up to 180 days, in certain cases for capital goods, longer. And this certainly helps when you're seeking financing. Again, as Ed alluded to, this can increase your borrowing base. Having insured receivables, your lender can advance against those. Ed touched on that, and I know Charles will probably as well. So the commercial risks that are covered, insolvency, bankruptcy, and protracted default, and then political risks, which are often overlooked, is currency transfer risk. You can't get U.S. dollars out of the country, war, revolution, insurrection, and cancellation of an import or export license, which happens more than you may know. There are a few different policy types that we offer. For those that are really new to exporting on open payment terms, our express insurance policy is fantastic. It provides 95% coverage. There's no deductible. The pay structure premium is pay as you go. So as you export, you pay premium. And we obtain all the credit information on the buyers. This policy caps out at 10 buyers. And then we look to transition you into our small business multi-buyer policy, if in fact you're a small business. This also, same thing, 95% coverage, no deductible, pay as you go. The difference here is that you do a little bit more work on obtaining credit reports and other important information for us to underwrite your buyer, but you enjoy a lower premium as a result because we're shifting the work over to you. You also are usually given some discretionary limit. So you can make your own credit decisions up to a certain amount without coming to us. And finally, we have a single buyer policy that, because of the concentration of risk, we offer 90% coverage versus 95% in the multi-buyer, but it also has no deductible. And this is handy if a business has maybe a private insured policy where their carrier can't provide sufficient limits, or they don't like an area in the world that we can provide coverage. We just insert a single buyer policy to fill that gap. Or perhaps you're a new exporter and you only have one buyer and one only prospect of having one buyer. Well, then we can issue a single buyer policy. Our rates, this is an example of the express policy where a 60-day term is given. The premium cost is 65 basis points, so 65 cents per 100. And in this example, on a $25,000 sale, your premium would be just under $163, so very reasonable. Now, if you couple this with a working capital guarantee, you also enjoy a 25% rate reduction in the premium, which is nice. This goes for SBA working capital guarantee as well. This is how the insurance works. Basically, just takes you through the process that you choose a policy. You offer credit terms to your buyer. You include those credit terms in the contract of sale. You ship the goods. You report that you have shipped those goods and pay the premium to EXIM Bank. Hopefully, you get paid by your buyer. If not, you can claim against EXIM Bank, and we pay you. The second solution is working capital loan guarantee. This is very similar to the SBA program with a couple of exceptions. So we still provide 90% guarantee to the lender. This is a lender-driven program. They determine which guarantee they use, SBA or EXIM Bank, if they need a guarantee at all. There are no minimum or maximum amounts for EXIM Bank. However, lenders will typically use the SBA for lower loan amounts. They have a preference and usually a dollar threshold, and use EXIM for higher limits. That's a generalization. There are other factors that go into that, but generally speaking, over maybe $2 million, they would look to use EXIM Bank. You can't use our working capital loan for some of the things like development and other things like that, as you can SBA. The loan has to be used for the production or procurement of U.S. goods for export. It can be used to collateralize a performance bond or standby, letter of credit. The eligibility criteria, really for the loans, you have to be in business for 3 years. You have to have a DUNS number for all of our programs. And in order for us to provide full support, the goods have to be made 50% U.S. have to have 50% or greater U.S. content on a cost basis. On our insurance program, the time in business can be flexible. We've done, businesses that are in business for a year, and we're comfortable with them, and we're insuring the transactions. A few restrictions, and this again butts up against the SBA program. We cannot support military or defense-related products or obligors. So if you are selling buttons to the Turkish military, we can't support that, even though buttons aren't really dangerous. Same thing that, U.S. content requirement, 50% or greater. We do have a country limitation schedule, and you can find that on our website. It'll identify where we can support and any limitations for that particular country. We look at economic impact to make sure that it doesn't hurt another U.S. company exporting a certain product to a certain country, that it doesn't, cut out a U.S. manufacturer. And sometimes we look for additionality, so why we are needed in a given transaction. This is the country limitation schedule on the screen. You can kind of see what it looks like. I encourage you to look at that country limitation schedule on our website. And this is my contact information, so I invite anybody to give me a call or send me an email with any additional questions that aren't answered during this call, and I'll be happy to discuss any scenario that you have. Turn it back to you, Brian.
Thank you, Richard. And remember, audience, Tony will be sending, or Anthony Sargis will be sending out an email with the recording and the slide deck tomorrow. So no worries. Moving on to our third speaker. His name is Charles Dugan, Vice President for TD Bank's Department of Global Trade Finance. He's based in New York City. He joined the bank's predecessor, Commerce Bank, in 2005, bringing more than 20 years of experience working with small and medium-sized importing and exporting companies in the Pennsylvania, New Jersey, and New York markets. Earlier in his banking career, Charles lived and worked and traveled extensively in Africa, the Middle East, and the Mediterranean. He joined Irving Trust Company, later Bank of New York Mellon, in 1982, where he remained for 8 years, including several years based in Bahrain. Prior to joining TD Bank, Charles completed a 12-year career at J.P. Morgan Chase. Charles has a BA in International Relations from the University of Pennsylvania and an MBA in Finance from Columbia University. He began his international career as a Peace Corps volunteer in Tunisia, where he was construction supervisor on projects that rebuilt and sanitized public drinking wells in rural America, in rural areas. Thank you for joining us. Thank you for joining us, Charles. The microphone is yours, sir.
Okay. Thank you, Brian. Well, here's something that might be on people's minds these days about trade finance and the COVID pandemic. We've seen massive disruptions in global supply chains in many industries. The trade volumes globally are down 18% in the second quarter of 2020. There's a significant realignment in supply chains coming and happening, shifting from China to Vietnam, Malaysia, and some what they call reshoring, bringing production back to the United States. The major global political, economic, and financial impacts are, and Joe may talk more about this, the global risk has increased. Many countries are reeling from the economic and the other impacts of COVID. The commercial risk is increased everywhere, including within the U.S. New bankruptcies are announced every day. I can't keep up with them anymore. And companies really need to review both sides of their supply chain, both their vendors and their customers, for resiliency and potential changes in terms. Just because perhaps you've been selling on an open account to someone for years without a problem doesn't mean you should continue to do so necessarily in these uncertain times. And so, as one of my teammates told me, it is not business as usual. It's a very different environment. So please keep that in mind. So here's our agenda today. We're going to talk about risk management, international trade, the payments methods, letter of credit, documentary collections, and financing a trade cycle. So there's really only 4 methods of payment in international trade. There's an open account. Obviously, that is the most convenient for the buyer. At the other end, there's an advance payment. It's the least convenient for the buyer, but it's the most convenient for the seller. And in between, you have letters of credit or documentary collections. Letters of credit, if they're confirmed by a U.S. bank, are the next most secure after an advance payment. An unconfirmed letter of credit is not quite as secure, but it's still a foreign bank's obligation to pay. And then you have collections, which are basically using the banking system as your agent to collect on your shipping documents. It's important to note that in the documentary collection, neither the seller's bank nor the buyer's bank has made a commitment to pay. They're just handling the documents and turning them over to the buyer when the buyer either pays or agrees to pay at some date in the future. So, the risk mitigation tools. You can have, of course, an import letter of credit. We do issue letters of credit on behalf of our customers to import merchandise. That's not the focus here. We have export letters of credit that we receive from foreign banks that are in favor of our customers. There's 2 steps to this, advising it, which is essentially authenticating it, and in some circumstances we will confirm it. We're not just saying this is the true obligation of this foreign bank. We're saying it is the true obligation of the foreign bank and we stand behind it. We do have a partnership with an export credit insurance broker. We do documentary collections, and we issue standby letters of credit as bid, performance, and warranty bonds. We do participate in the EXIM Bank Export Working Capital Guarantee Program for our small, medium-sized borrowers. We also participate in the SBA's Working Capital Guarantee Program. And we do issue Create Bankers Acceptances. That's a refinance tool based on a letter of credit. We're available to discuss international risk mitigation and provide training when needed. We'll review the proposed payment, procurement, and other methods with our customers. Okay. So what's a commercial letter of credit? It's an irrevocable mechanism for payment. And so it's a bank's commitment to pay, but it's contingent. It is contingent on presenting the documents that are required. It's the issuing bank substitutes their credit in place of the buyer. And it's subject to the seller presenting the documents that are required. Obviously, the importer receives an assurance from the issuing bank, and they're assured that the merchandise will be shipped. It's safer than just sending a wire transfer and hoping the goods get put on a boat. And the exporter gets a financial insurance from the issuing bank. The vast majority are issued electronically nowadays through the SWIFT network. We have at our bank a network of about 400 banks around the world that we have the algorithms in place to authenticate, to communicate with them in a authenticated and encrypted fashion. So if we confirm a letter of credit, the advising bank is assuming the same responsibilities as the issuing bank to pay against the documents that conform to the letter of credit. Now, obviously, that's a risk that the confirming bank is taking, so we have to have a line of credit for the issuing bank. And we also require, and this is our own policy, that the exporter have not just a checking account relationship with TD Bank, but we require them to have a borrowing relationship with the bank. So obviously the exporter, if they request confirmation, they may have concerns about some of those risks that were mentioned earlier, both commercial and political risk. And so that the exporter is not required to keep reading the tea leaves in these foreign markets. Now, transferable risks, transferable letters of credit are more talked about than done. It does allow a smaller exporter to actually leverage up the letter of credit that they've received, and the middleman doesn't have to issue their own letter of credit. But they're relying on each other, the original beneficiary and the transferee. So that's a risk. If you're going to transfer a letter of credit, you better transfer it to somebody that you have the confidence that can perform and obtain and present the correct documents under it. Now, a standby letter of credit, I'll give you a brief rundown on this. It's a secondary payment vehicle. It is not, in most cases, it's not intended to be drawn. And it basically, if it is drawn, it means somebody has failed to do something. They failed to deliver something, perform some action, or pay something. These are used in bid bonds, performance bonds, advanced payment guarantees. In New York City and elsewhere, they're often used as lease security in lieu of a cash down payment. And sometimes they are used behind open account transactions. They can be confirmed. They can also include an evergreen clause. That is because in the United States, banks, any letter of credit they issue has to have a stated expiry date. That's not the case in many foreign markets. So for instance, in North Africa and other markets, we are often in the position of asking other local banks there to issue their guarantee without an expiry date. So the workaround is we issue ours with an expiry date, but it automatically renews every year. It's based on the risk. We do use the bank's capital when we issue a standby letter of credit, so we have to pay for that capital. And, of course, how much capital used depends on the risk of our customer, the applicant. We can certainly issue letters of credit in a number of foreign currencies. We can receive them in about 20-some currencies. The issue is, of course, if you are an exporter and you accept a letter of credit in a foreign currency, you're taking a foreign exchange risk. That amount of euros or yen or British pounds that you receive when you get paid might be less than it is today. So if you do, decide you need to make a sale in a foreign currency for competitive reasons, please be aware of the foreign exchange risk and approach your bank to do something to mitigate that. So a collection is a payment, it's a way to transfer the title. The exporter sends the shipping documents to their own bank with instructions to send them to the buyer's bank and the conditions on which they'll be released, which is either payment or acceptance of a draft that commits the buyer to pay at some future date. It's a less expensive means of payment than a letter of credit. It doesn't include the bank's undertaking to pay. It's really something you would do for a trusted buyer. In some markets, it's required. In India and some other markets, this is more for the importers here. The exporter is not allowed to just export the merchandise and accept the wire transfer. They're forced by government regulations to send the documents on a collection basis. And there's some other jurisdictions where that's the case. So it's a site payment, or it's also called documents against payment, or they can be documents against acceptance of a draft that matures at some point in the future. And they're less expensive than a letter of credit, of course, but they offer you less protection. They work better for ocean shipments than they do for air shipments, given the contract for carriage between the seller, the shipper, and the steamship company and the airline. It's a different type of contract. And I think I'm just about done here. Okay. So here's my contact information. As Brian said, I'm based in New York for the moment in my kitchen, but you can reach me at these numbers here. So thank you for your attention. That's it, Brian.
Thank you. Thank you, Charles. We appreciate it. And remember, audience, any of our 4 speakers are open and willing to receive calls, call you, just email them, call them. They'll step you through the process and understanding all the products and opportunities for you, the exporter. Our final speaker today is Joe Shoemaker, Marketing Director for Risk Protection International. Joe has been part of the U.S. business community for over 3 decades, working with a number of major financial institutions while focusing on international banking, trade finance, and credit insurance programs. For the past decade, Joe has been an insurance broker with RPI, which is headquartered in Stratford, Connecticut, but Joe is based in New York City. Risk Protection International specializes in trade credit and political risk insurance used by U.S. companies that export, import, and I just learned, also domestically across the country. As marketing director, Joe works with many of the top international underwriters, which includes the U.S. Export-Import Bank. Joe's past international banking experience includes various officer positions with American Express, State Street Bank of Boston, Chase, and Bank of America. At this time, Joe is Secretary and Treasurer of the New York City District Export Council, which is affiliated with the U.S. Department of Commerce and was appointed to this voluntary position by the U.S. Secretary of Commerce. While also head of the World Trade Council of Westchester, Joe won the President's E Award for Excellence in Export Promotion. He is a licensed insurance broker in the state of New York, a member of the Board of Advisors of Export University. Joe is a graduate of Fordham University with a degree in economics. Joe, thanks for joining. The microphone's yours, sir.
Thank you all. It's not the New York City DEC, it's the New York State District Export Council. A lot of people try to say it's the city DEC, but let me get to, and if you'll advance the slide, please. Yes, let's look at the balance sheet first to see where credit insurance comes into play. Credit insurance, insurance in general, is what every small and mid-size or large company is going to be involved with. And I say that insurance in general. So property and plant, machinery, transportation, inventory. We want to focus on accounts receivable, which is often the largest part of the balance sheet. And often people just assume that if they have a customer, they can check out the customer easily, and the customer will pay its bill in 30, 60, 90 days, or long term. So we're going to focus on accounts receivable right here. And if you'll advance the slide, please. Okay, fine. Now, in the accounts receivable, and we've heard a little bit about this from Charles just a moment ago, we're talking cash in advance, letters of credit, and documentary collections. But open account, and this is where credit insurance comes to play in the open account area. Open account probably covers maybe 80% of all sales that are made worldwide. That's one of the figures I've looked at over the years. And so if you're dealing in competitively, and if you're dealing competitively domestically or overseas, you're probably going to be asked to do open account. If you're selling to somebody in Mexico and you say, gee, I want cash in advance or a letter of credit, the guy down there might say, gee whiz, I can deal with the people in Germany, and they'll sell me open account on 60 days. And this is where we want to focus right now and how credit insurance attaches to open account sales. And if you could advance the slide, please. Just to give you a little bit of background, I am a broker. I want to just chat briefly from a legal point of view. There are brokers and agents with the insurance companies. We're talking here in the United States. And remember, credit insurance is regulated by the 50 states. Credit insurance, or insurance in general, is under the auspices of the various state finance departments and so on. So I am a broker. Agents usually work for actual insurance companies. As a broker, I work with all the insurance companies, and I'm licensed in the state of New York. Would you please advance the slide, please? Now, as far as trade credit insurance is concerned, we can cover either export or domestic, which we're going to cover here today primarily as exports. And since I see most of the people are small and mid-sized companies, I'd like to interject at the moment that in the United States, credit insurance covers about $600 billion in sales, $600 billion in open account sales. Of that $600 billion, approximately 60% or more is utilized by small and mid-sized companies. So we're going to discuss export here. We're going to discuss primarily selling overseas, but keep in mind a lot of people, a lot of companies will get insurance policies that cover both their domestic and foreign sales. Produced and shipped anywhere. We've heard a little bit from the EXIM Bank that it has to be 50% content. If you're dealing with most of the insurance companies in this country, and when I say we deal with insurance companies in this country, many of them are owned by foreign companies. But we'll go into that a little bit more. So anything produced or shipped anywhere permitted by law should be able to be covered. Would you please advance the slide? Now, what are the benefits of using credit insurance? Obviously, you're going to reduce the risk, your financial risk, as far as your balance sheet is concerned. If you're selling both domestically and from a foreign point of view, and you're having trouble collecting on certain receivables, obviously, you're going to want to look at credit insurance, or you may want to look at cash in advance, or you may want to look at a letter of credit. But we're going to stick here with open account sales. One of the other things that we heard a little bit from the EXIM Bank and the SBA as far as boosting borrowing power. If you have credit insurance, it is certainly possible to work with your bank. It could be TD Bank, it could be Chase, it could be Wells Fargo, as far as assigning the policy or the proceeds of the policy to the bank to increase your borrowing capability. Usually you can borrow rather easily against your domestic receivables without going through too many hoops. But from a foreign point of view, you may find a lot of banks are looking for credit insurance. They may not lend you 100% of the value. They may lend you 60 or 70%. And a lot of that will depend on who the insurer is you use. EXIM Bank is always a very strong underwriter as far as the banks are concerned, as far as extending extra borrowing. Also, extending terms. Now, you would say, gee, I want to sell to that company in Mexico or Brazil or Singapore on 30-day terms. But you may find that the company in Mexico, Brazil, or Singapore is a good risk. Maybe you can do 60-day terms or 90-day terms, which will help you in getting that particular sale. Expanding sales. You may say, gee, I don't want to deal in Uruguay or Zimbabwe or in Vietnam, but you can find new markets that will be covered by the insurance underwriter, markets you may not have ever been interested in selling for. You open your email in the morning and you find out somebody in Vietnam wants to buy your product and wants to buy $10,000 a month and so on. This is a good way to develop new markets. And, of course, it can apply to both domestic and foreign. And as you can see on the slide, stabilized cash flow, that basically means that you're going to mitigate your losses. And if you could advance, please, the slide. Number of policies available, multi-buyer. We heard a little bit of this from our EXIM Bank expert. Multi-buyer policies is what you look at most of the time, and often I suggest you start with the EXIM Bank. Let me also mention the EXIM Bank loves to have people deal through brokers, and Risk Protection International is an approved broker, and you can go to their website and you can find Risk Protection International listed there. So anyway, multi-buyer policies, whether it's from the EXIM Bank or a dozen other underwriters, are easily available. Single buyer policy, you have a big sale in a market overseas in Brazil. It is possible to deal with. Certainly the EXIM Bank might be the best place to start with a single buyer, but a number of the other underwriters will deal with a single buyer policy also. Medium-term policies, if you're selling over 180 days or maybe over a year, it is possible to get a medium-term policy again, would suggest the EXIM Bank you look at first, but a number of the other organizations do medium-term policies also. If you would please advance the slide. Now, what's covered in trade credit insurance? We heard a little bit of this through Richard a short time ago, but let's emphasize that most of the time it's commercial risk. Political risk is nice. A lot of people get credit insurance because they say, gee, I don't understand who the president of Brazil is, or the president of Uruguay, or the president of Vietnam. I want political risk coverage, usually up to 100% in many cases. But the major point of risk as far as credit insurance policies are concerned would be commercial risk. Insolvency, bankruptcy, protracted default. You saw that on one of the EXIM Bank slides a short time ago. Insolvency is probably what you're going to look at most. You're dealing with that company in Brazil or Mexico and it goes out of business. You're probably going to, if you do not have credit insurance or a letter of credit or cash in advance, it's going to be very difficult for a small or medium-sized company to collect on that particular policy in Brazil or even in Mexico or Canada, because you're going to have to know a little bit about the laws down there. So insolvency, bankruptcy, protracted default. In particular, protracted default is you sell to somebody and you find out that they're just simply not paying. They haven't gone into bankruptcy, but they're not paying. But I won't go into the detail on that. But from a political risk, you've heard from Richard before, transfer issues are probably the biggest part of political risk, in that you may be dealing with somebody in Brazil or Singapore, and it's going to be difficult for them to exchange their currency for U.S. dollars to send back to you. Of course, you can deal in some foreign currency, but I won't go into that in detail right now. Would you please advance the slide? Okay, how credit insurance works. There's 4 parts to it. This is 4 interesting parts. I think you need to study this as closely as you can. The pricing. If you're dealing with the EXIM Bank, you can go to their website and find out their pricing immediately. But with all the other underwriters, you're going to have to negotiate with them, and this is where a broker comes in, so let me sort of blow my horn a little bit here. Of course, my horn is not close to me here, so you'll have to listen to my voice. Pricing, how, are you selling $2 million a year overseas? Are you selling $20 million a year overseas? Are you selling $100 million overseas? You have to work on what the pricing will be. And often the pricing with EXIM, they have a great policy where you can pay as you go on a month-by-month basis. All the other underwriters, just about all the underwriters, want you to pay up front. So if you're doing $1 million or $2 million a year, you'll negotiate the price. Structure, very important. I guess the best way to compare it to is maybe to auto insurance or medical insurance. What does the policy say? Are there deductibles? Are there non-qualifying items? You need to sort of study the policy. Again, working with a broker or an agent is very important here to find out how the policy is going to be structured. And I can't go any further into that in a quick overview here. Underwriting. Underwriting is extremely important in that who are the buyers that you're dealing with overseas, in Mexico, in Brazil, in Singapore, in Vietnam. And that's what that term refers to, underwriting your particular buyers. While you might be able to while the insurance companies may allow you to make some of your own decisions here, in most cases, if you're a small or mid-sized company, you want to be able to give your underwriter that you're dealing with, whether it's EXIM Bank or the dozens of others that exist out there, a list of who your buyers are, maybe starting with your 5 or 10 or 15 largest buyers. To find out, will they approve that particular buyer in Brazil or wherever it may be? And that also applies if you're doing domestic. Loss reserves, that is more of an accounting type of terminology, and I won't go into that at the moment, but it just simply means you may be able to reduce your loss reserves if you have credit insurance. And if you'll please advance the slide, please. This is some special risk areas that we occasionally get involved in. I won't cover anything on this particular slide, but if you have questions on it, you have my email address and my telephone number. If you'll advance the slide, please. Okay, client support. This has to do a lot with what we do as a credit insurance broker as far as administering the policy and claims management, very important, and finance solutions, of course, as I was mentioning before. It is certainly possible to use your credit insurance policy to obtain financing from your bank. It's not guaranteed they'll give you financing, but it is something that you can negotiate with your bank. If you will please advance the slide. Okay, a number of underwriters exist. I list EXIM at the top. We've been very important with EXIM over the years. Euler Hermes is probably the largest insurance company, credit insurance company you'll find here in the U.S. or worldwide. Again, this is touching upon a little bit before. A lot of the insurance companies are owned by European owners. Euler Hermes is one of them. Coface was probably maybe the largest here in the U.S. as far as doing domestic credit insurance. American International Group, FCIA, Atradius, Zurich, and I've only listed a few of them, but there are a number of them out there that can be dealt with, and we get into specialty insurance companies from time to time also that would cover certain risk in certain difficult situations. I'm going to keep to my time here, and if you'll advance the slide. Multi-buyer policies, we've heard a little bit from Richard on that. I am not going to go into any detail here other than pointing out one particular item. If you go to the third item, no established credit department or current credit files. What credit insurance offers small and mid-sized companies, if you've got a credit manager you're paying so much a year to, and you've got 2 or 3 analysts that work with that credit manager, look at credit insurance as a way to be your sort of outsourcing your credit department. Because what you're doing with the credit insurance underwriters is you're sending information to them initially when you put your first 5, 10, or 50 buyers in there, but when you need to add somebody to it, and you go to you don't want to sit in your desk and take a financial statement and try to figure out what it is, whether it's in Chinese or Spanish or whatever it is. The credit insurer is able to do that for you. So you may be able to control costs if you have using a credit insurance policy. They will have credit insurance information on most of the buyers you're dealing with, and they will also be able to do one other very important thing. You have that great sale in Brazil, and you go to the credit insurer and say, look, I got this great sale in Brazil, and they come back to you and say, sorry, Charlie. Oh, excuse me, Mr. Dugan. Sorry, that company doesn't exist, or we've heard of the company, but it is not creditworthy. Do not sell to it. So there is a big advantage to dealing with an underwriter who has all the information on the buyers you deal with. And I told you before, premium based on portfolio risk usually covers 90% commercial and political risk and can cover up to 95% in some situations. Would you please advance the slide, please? Okay, some information here on single buyer policies. I will not go into any detail on that at this particular point. Normally this seminar might be 45 minutes to an hour and so on. If you'll advance the slide, sir. Okay, medium-term policies. This gives you a little idea of how a medium-term policy works, and that's for usually some sort of a single sale that you're selling overseas. You really want to do the policy, but you need to have coverage. If you'll advance the slide, please. Okay, a little bit here, which I've touched on already. Financing and assignment options. This is where it's possible that you can get loans against the foreign or domestic policies. And I will say let's advance the slide on this one also. And this is a very important slide. Just call me Joe. This gives you information how to get more information. And don't hesitate to give me a call at the New York number, the Connecticut number, or at my favorite email address. I'll say thank you very much for listening.
Thank you, Joe. We appreciate it. Thanks for clarifying, too, the New York District Export Council. And I'd like to thank all speakers that joined today for offering their time and sharing their knowledge and experience. We will now move to the Q&A portion of the webinar. Melinda, please provide the audience instructions on how to ask a question by phone.
Thank you. And at this time for your phone questions, please press star 1. Please unmute your phone and record your name clearly at the prompt. To withdraw your request, please press star 2. Once again, please press star 1 at this time for any phone questions. One moment, please.
Thank you, Melinda. While we wait, one question came in, and this is to Charles. Charles, does an exporter have to be a TD Bank customer to receive a letter of credit advised through TD Bank?
Thank you, Brian. No, they don't have to be. They do have to be a customer, and that means they have to have a business checking account with TD Bank for us to advise a letter of credit to them. They do not have to be a borrower for us to advise a letter of credit. But if they want us to consider confirmation of that letter of credit in addition to advising it, we do have to have a lending relationship with them. Because we know our borrowing customers to a deeper extent than our deposit customers. That's the logic behind that requirement.
Great. I appreciate that. Melinda, do we have anybody on the queue?
At this time, we are showing no phone questions.
Okay. I have one more email, or one more that has been written in. This is to Joe. Joe, can you help us or explain how the claims process works?
Yes, I can definitely explain. Let me just preface that a little bit with some information that you're probably all well aware of. Insolvencies are definitely up here in not just the U.S., but across the world. Late payments are common at this particular point, and one of the things the insurance companies are doing at this time is raising rates by as much as 10% at this particular point. And the insurance group here in the U.S., the companies have asked the U.S. government, this is back in June, I don't know where it stands, that they would like a $60 billion bailout. I guess we'd all like a bailout. I guess I need another $1,200 check here. As far as claims are concerned, specifically, there are methods for submitting claims. Usually you submit a form. Most claims, I should point out, have to do with bankruptcy. And if a company does go into bankruptcy, you can file a claim immediately, even if you've given 120-day terms and the company's gone out 30 days later, filing for bankruptcy can be done almost immediately with any underwriter. But what you do, and I will put a little pitch in, it's nice to have a broker when you have a claim and putting in the proper forms, which include shipment reports, bills of lading, shipment reports, packing lists, and stuff like that are usually required. And my experience over the years working with credit insurance is they're rather prompt as far as paying. The important part is to make sure you document what you do. Document it before you ship it out. Thank you.
Thank you, Joe. We appreciate it. Melinda, I'm going to ask just one more time if you have anybody in the queue to ask a phone question.
Thank you. And we are showing no phone questions.
All right. Well, everyone, I appreciate the speakers. I thank the audience for tuning in. This does conclude today's webinar. Thank you, everyone. And stay healthy and stay safe. Goodbye.
Thanks, Brian. Take care.
Thank you. And that does conclude today's conference. We do appreciate attending. You may disconnect at this time.